Hello all. After seeing the Oracle financial introduction, we are moving to the first module, Oracle Financials Functional General Ledger. As we all know, General Ledger is a leading module which has which is the centralized module for Oracle ERP. So in Oracle, we have multiple modules like financials, supply chain management, human resources, and n number of modules, inventory, shipping, whatever. All the modules, the accounting system, it integrates into general ledger. Because for a organization, we have to check the trial balance, balance sheet, and P&L account, which is the main financial blood of the business, you can say. So all the accounting information will flow to general ledger. Trial balance will be created automatically, and balance sheet and P&L account, profit and loss account, we will create manually in the FSG report. Everything we are going to see one by one. Yes. So general ledger is the central repository of all accounting information. That's what I told you. It is a repository. See, we have payables, we have receivables, we have assets, we have cash management. So we have 5 financial modules. So all the accounting will be integrating here. So for example, if you are working on HRMS module, for payroll, you are paying per month salary to the staff. So what happens at the end of the month? It comes to the payment module of the AP, then it comes to flows into GL. So everything has an interconnect. That is ERP, well connected to GL. Next, it records financial activity of a business, obviously. Produce financial and management reports. Financial reports are mandatory reports. We know trial balance, balance sheet, profit loss account, which is mandatory for as per our local laws, income tax law, company law, and worldwide, everywhere in every country they have to produce this according to their accounting standards or IFRS they follow. So what is management reports? Management needs budgeted reports, that this expense report, they want to see a hike, they want to see DSO report, DPO purchase reports, whatever reports you can build here. With the help of technical also you can make it specific. Decision making helpful for budgets. Yes, you have budget in the general ledger. So it is used for the decision making, whether we have to increase the expense for this, decrease, or whatever the decision we want to make. Correct actual and budget information before accounting. Once we accounted, before posting, we have time. So at that time, you can alter whatever you want. So after posting, you cannot do. So we cannot delete anything in ERP in general ledger. Okay. So what we'll do, we will reverse the transaction and create a new transaction. So that can be done in the existing month or the next month. Okay. Record and review accounting information. Yes, it will be recorded all the transaction and you can review. Import data from subledger. As already told, what is subledger? Except GL, all the modules are subledger to GL. So from that data will flow into general ledger in the month close or daily basis, whatever they have scheduled. Review account balances through reports. Yeah, you can review the account balance, you can inquire the journal, all available in general ledger, and through reports also you can see. Analyze, correct, and adjust all accounting entries. Yeah, there will be various level. The user level will create the entry, the manager level will can check and post. It is according to the organization structure what they have to do, and you have to analyze. You have PL analysis. At the end of the month, you can do account analysis, which your account out to you can correct and adjust. So as all said, what is correction, what is adjustment? If it is before posting, you can always correct, you can always adjust, and after posting, you have to reverse and you have to redo it. Yes. General ledger overview. So like the previous slide, you can correct actual, budget, and encumbrance information. So encumbrance comes along with budget. Suppose you are creating a purchase order, there is an encumbrance slab is given to it. So there the encumbrance accounting will generate in the budget. What is the difference between actual and budget? Okay. So most of the firms, if they want it at the time of the setup, we have to create it. Okay. Then revalue. What is revaluation in general ledger? Suppose my head office in US, my branch in Chennai. Okay. My accounts all will be in the INR, Indian rupee. But the head office want to see in their books. But you cannot create all the invoices or something directly in the INR USD, because we have to uh, see our legal entity is properly configured, and we have to see local legislation we are following, because our physically our office located in India. We have to produce Companies Act, income tax, etc. Our books. Okay. So what happens? So there is a concept of revaluation at every month end. We are doing this both transaction. So one, what I said the example is for translate. What happened? We'll run a program called translation. It translate all the currency into USD and shows them. It will not affect the real transaction in the books. It just will replicate in the report. And what is a revaluation? Revaluation, every month end we will run, and first day we will reverse it. So what happens at month end? You revalue your assets and liabilities. So whatever you configure, that accounts only will run automatically run the program. So that program will tell the latest value. Suppose I bought a fixed asset of 10,000 USD before 1 year. Okay. At the time the USD rate is 70. So it will be 10,000 into 70. Okay. Maybe 70,000 INR into 70. Okay. 7 lakhs. 700,000. So now it is 80. The revaluation will take the extra amount of 1 lakh or 100,000 to the revaluation, unrealized gain or loss. What is unrealized gain or loss? It will be reversed in the next. It is not a realized gain. What is realized gain? It is from P&L account. Whenever you generate an invoice, you raise an invoice today, after 1 week you are getting the money back. At the time the difference between the fluctuation charges, that is realized. So this is called revaluation. Consolidate balances from multiple ledgers. Yeah, you can have more than one ledger. So you can do a consolidation. There is a consolidation in general ledger. We will see. Analyze accounting information. So always general ledger is for analyzing. So various levels, consultants, management, everything, everyone will analyze. Auditors, whoever can analyze. In the read-only format, they can do auditors. Integrate general ledger with Oracle Discoverer. Oracle Discoverer is a tool, technical tool. There also you can integrate general ledger for creating multiple reports. Now we are going to see the functions and features. So information access. Access information is stored in general ledger in the repository. General ledger is the repository of your organization financial information. Financial control. Use security features to control access to specific areas and function of general ledger. Data collection. Collection data from Oracle subledgers and non-Oracle feeder system. We know Oracle subledgers. What is non-Oracle feeder system? So both concepts are same, non-Oracle system or feeder system. So what is feeder system? Suppose I am having Oracle financials in my company. I have AP, payables, receivables, general ledger, cash management, asset module. I am running the business. Suppose I am running a telecom industry. I want to capture the postpaid number of minutes second. I am bringing another software called Amdocs. So that is a billing software. So Amdocs software, instead of AR, I'll create for billing. Then it will interface to AR. Then it will come. So that is called a feeder system. So I can have, like I have a shipping module for capturing the BLs, etc. I am having a customized module that can be integrated into my Oracle system. So that is called Oracle feeder system or non-Oracle system. So everything, whatever ERP that can be flowed, that can be connected. What is financial reporting and analysis? Select from a variety of standard reports and listing. Yes, we have inbuilt many reports, not one. Use the financial statement generator, FSG, to build customize report with reusable reportable objects. What is reusable report object? We'll have a control set that will have, you can copy that report and do it. See, normally every report we will expect the help of the technical consultant. As we are functional consultant, we'll see only the front end. You can see, you can develop the report with the FSG, financial statement generator. You can create a balance sheet, whatever it is, and you can create a profit loss account. Because as I said earlier, only trial balance is inbuilt. So we have to create manually, then you can copy and you can develop it. This is created very easily by functional consultant. We are going to see in detail below. Use Oracle Report Manager to submit and publish FSG. Yeah, there is a Oracle Report Manager also there. That also you can use it. General ledger accounting cycle. So there is a cycle, month end. Every month there is a cycle. Day one, you will open the period. Once the previous period closed, create or reverse journal entries. You create journal entry. If it is wrong, you found it, and you can reverse a journal entry. Post. Once the journal is created, you can post. And review. This is a post review by the management, analysis, etc. Translate. As I said, translation, we can run a report. Consolidate. If you are having a consolidation book separately, a report will flow for consolidation. This will not affect the actual books like translation. Review or correct balance. At any stage, anyone can review. The management or the auditors will take a review on the later period. The correction can be made. Run account reports. Close the account period. Once period is closed, you cannot enter there. Then once again you have to follow the cycle. You have to open the new period. Then you have to follow it. So at a time only one period will be open. You can have future period. What is future period? Future period is, it's like a dummy period. You will open the next period. Suppose now it is October, November, December, I can open and keep it. You can enter the transaction, but you cannot post it. Okay, that is called the future period. So it is an overview of how the Oracle General Ledger integrates with the other modules. So I told financial, payable, receivable, asset. These are financial modules. We have purchasing, SCM, projects is a separate module. Treasury is a separate module other than cash management. Property manager specific to that, lease management. So these are all part of added financials. If the client needs it, they can purchase any point of time. We have HRMS, human resource and payroll. Like that, many modules are integrated. Here we have seen a few. Okay. Okay. Oracle General Ledger integrate with Oracle. How we seen a scenario. Oracle Payable sends invoices, realized gain and loss or profit. See the word realized gain. For invoicing, it happens in the profit and loss account. So it should be realized gain and loss on foreign currency. Invoice price variance, it will go to GL. All the accounting will flow to GL. So this is for payable. Oracle Asset sends capital and construction in progress asset addition, cost adjustment, transfer, retirement, depreciation and reclassified to GL. Wherever there is a journal entry generates, it has to go to GL. So what is construction in progress asset? Anyway, we'll see in the asset module in detail. What is construction in progress? Suppose we are building a bridge. It will take 10 years, but there are a lot of amount we have put in. Okay. So the engineer will certify at 80 or 90% the bridge is completed. It is almost completed. So then only you can move into the asset. Up to that it will be construction in progress where depreciation cannot be done. Once it is fully changed to a capitalized asset, the depreciation will start. It's like a temporary account. Oracle purchasing send accrual or receipt not invoice, purchase orders, final closures and cancellation to GL. Oracle treasury sends revaluation and accrual entries to GL. Property management sends revenue and expenses related to the real estate to GL. Whatever a financial transaction in any module, wherever it's happening, it has to come to GL. Oracle lease management sends accounting distribution relating to leases, such as bookings of contracts, accruals, asset disposition and adjustment for multi-gap contracts to GL. Oracle HR shares employee information to GL. Oracle payrolls and salary, deductions and tax information to GL. This is an overall overview how the GL is an integrated and central point for all the modules. It's a sample. So, for example, we given a sample for manufacturing and public sector. So, manufacturing modules, manufacturing inventory, work in progress, labor distribution, public sector, grant accounts, public sector budgeting, public sector financial, federal financial. So, these are all different modules where you can see mostly in Africa they are using this public sector. Mostly they want to use in government sector. Okay, these are all very rarely used, and you can want you can go and read it in the Oracle guides. Terms of manufacturing and public sector application, inventory sense, cycle counts, physical inventory adjustment, receiving transaction, delivery transaction, intercompany transfer, sales order issues, internal requisition, sub inventory transfers, and cost of goods sold to GL. Work in progress sense, material issues are backflushed from WAP to GL, as well as the completion, returns, resource and overhead transaction and cost update. So we are seeing variety of types in variety of module. So each one will have a relevant account. So that account from the setup it will flow to GL. So we don't have to worry from which module it comes every time. So the relevance account will be hit. Oracle labor distribution sends salary cost to GL. Oracle grant sends grant amount received to build a project as well as unbilled revenue to GL. Oracle public sector budgeting sends budget and forecasting amount to GL. In addition, Oracle also integration with the business intelligence or analytical solution, FCH, financial consolidation hub, Oracle financial service application, business intelligence, activity based management. So Oracle financial service application is a product suite. Oracle business business suite like that. It helps financial services institutes assess enterprise performance. This integration allows the transfer of GL balances to OFSA to reconcile the instrument tables, calculate transfer pricing of non-interest balance sheet items, or performs allocation. Oracle Business Analytics to get a daily snapshot of your company financial picture through e-business to portal. See BI. Or the integration of Oracle activity-based management allows you to perform complex analysis on costs that are collected in general ledger in a separate analysis environment apart from your GL data. So, how Oracle Financial seen in a technical side, how it integrates. Transferring information from Oracle subledger is a two-step process. Data is pushed to GL interface. What from subledger it has to come to GL interface using a transfer program. Journal import full the information from the interface table to create a valid postable journal entries in general ledger. Processing prospective transferring information to GL from subledger is done by Oracle SLA. There is a new concept we have seen, Oracle SLA, rule based accounting engine and repository that centralizes accounting across the e-business suite. Oracle Subledger Accounting creates the final accounting for the subledger entries and transfer the accounting to Oracle General Ledger. We have come into the important topic, the setups, how to set up the Oracle GL in Oracle Financial. So we call accounting setup manager. Here we'll see all the setups. Central place for defining and maintaining accounting setup for the following legal entities. So what is legal entity? Legal entity is the second highest level in the business group. Okay. Operating unit, we have to create it. Ledger, we have to create primary and secondary ledger. Reporting currency, optional. Subledger accounting, intercompany and intra-company balancing, sequencing. Three concept, foreign currency concept. Already we seen the revaluation and translation. The three concept of in the Oracle General Ledger for foreign currency. Conversion. Conversation refers to the should be the conversion that are immediately converted into time of entry into the ledger in which the transaction takes place. So as we said, conversion. So it will convert what I said each and every time. It converts your balances to the conversion requirement that immediately converted. Okay. Suppose you are setting up the reporting currency. I am entering in INR, automatically the foreign currency I am entering INR, the home currency will be transferred into USD because the company registered in USD. The main ledger currency, if it is USD, each and every transaction will go there. So other currencies are foreign currency. So each and every transaction you can see. What is the difference between translation and conversion? Translation, it's the act of reinstating an entire ledger for a company to a foreign currency. So whenever you need, based upon that, you can run a report. This is conversion is each and every transaction it takes place. Okay. Revaluation, liability or asset materially understated or overstated at the period due to a fluctuation in the exchange rate between the time the transaction was entered and the end of the period. Okay. As I already quoted an example, before 1 or 2 years or before 10 years, you bought from a foreign country, you bought for 100 USD, now it become 10,000 USD or something like land or something. It is appreciation. So that will fall into revaluation and unrealized gain. But when you sold only, it will become an actual gain or loss. Multiple currency concept. Reporting currency or additional currency representation of primary and second ledger. Okay, you can maintain additional currency representation at three different level. Balance level, only at the balances you need you can do. Journal level, each and every journal. Subledger level, at subledger level. So we have to decide once we going to set up this, which level you need the multi-currency option. So balance level, maintain translated balance. When you run translation in the general ledger, balances are stored in the balance level reporting currency. Journal level, currency representation of your GL journal and journal balances. Subledger level is a complete currency representation of a subledger transaction, GL journal entry and balances. So these are the differences. Here are the some standard reports which is available in Oracle Financial. Oracle General Ledger provides across 70 standard reports. The following categories provides financial and non-financial information to GL data: account analysis, chart of accounting, currency, journal, execution, budget, consolidation, general ledger, trial balance and other reports. So it will request the reports online. It can be generated in the background only. You do not have to wait for each report. Group and submit report to report set. You can have report set combination of all the reports and you can schedule reports periodically. It will automatically run, so you can download it whenever needed. So what is ledger? Functional concept in Oracle application is the ledger. The ledger represents an accounting representation of an organization that is accountable in a self-contained way. A ledger owner might be a legal entity, a group of company, in a common legal environment, a substantial operation within a legal entity, but with a legal entity attribute or a foreign budget. Whatever it is, it can be. Okay. Whatever can be a thing. Okay. So, ledgers can consolidate and manage organization model reporting. In a pure implementation, a legal entity accounts for itself is a ledger. Okay, it is under various concepts, but we have to understand a ledger is the important thing while we creating a accounting setup manager, because it involves the chart of account and the main framing the business. A ledger provides balanced ledger accounting for the accounting entity, serves as the repository of financial information. It is a principal source of information for the analytical application in the e-business suite. Ledger balances have a meaning. They assert the balance in an account at a given data, specific value in a particular currency, and it is properly calculated. Now, what is secondary ledger? Secondary ledger are used to supplementary purpose and can be used for global company to comply with various legal requirement. Yeah. If there is any change in 4C, we have created a secondary ledger. So that's how it is saying it's a supplementary purpose it is created. For global company comply with the different country legal requirement, consolidation or management report, a complete accounting picture itself or partial grouped with the other ledger to provide a complete picture. The benefits are more flexibility, represent legal entity accounting information, a different accounting method, chart of account, calendar, Subledger accounting method maintained four different levels. Second ledger conversion levels: balance level, journal level, and subledger level. Here we know the balances will be transferred. Second, journal level, we already seen the journals will be transferred. Normally we'll use balance level. Okay. Next is subledger level, subledger wise. The posting necessary journal in the primary, it's a subledger level. There is a adjustment only level. Only adjustments only will be transferred. Can be a manual adjustment or an automatical adjustment. Automatic means but done by the system. Okay. Reporting currencies. Business reason for the reporting currency. Important point. No need to physically move the balance to create views of consolidated data. There is a parent consolidation entities. And benefits. Tighter link to the ledger for accounting and reporting in other currency can be used with primary or secondary. So wherever you can use a additional reporting currency. You can see, you can read it. The same thing, balance level, journal level, subledger level. We have seen in various things, even in the SLA. Here also the same levels. Okay, reporting currency we call RC. So the three levels it can be maintained. Accounting setup sets. As we seen the accounting setup steps, you have to define a chart of account, you have to define an accounting calendar, currency to be enabled because it is already created in the system. Define the legal entity. Legal entity is optional setup. So you can skip if it doesn't require a legal entity. At any time you can create it. One or multiple entity to one. Legal entity you can assign. Define a primary ledger. Okay. So the 4C's concept comes into place here. So here are the detailed steps is given here. We'll create the practicals. So you can cross check this at the time how we are doing it. Yes, the generic points. We can cover it in detail. Completing account. Wherever comes the 4C, you have to create and save it. Chart of account, calendar, currency, subledger, accounting method. Identifying the business requirement. How are you identifying a fresh business requirement? So business need to track analysis several application. Example, company, legal entity and fund. This is the first segment. Segment wise we have split it as an example. Division, region, territory, state or country. Location, plant, office, stores, etc. Accounting category. This is fixed. You have asset account, liability, owner's equity is a different group that we transfer the profit or loss from previous year. Revenue and expense. This is mandatory. Product line of business channel, project phase task. And you have as many. Minimum segment is 2, maximum is 30. The more and more you go, more and more complicated. So the two mandatory, as I said, natural account is main and one is company, that company legal entity. These two segments are mandatory segments which has to be form part of the chart of account. All detail content in the one application itself. Do not add extra segment into the accounting flex field structure for detail that is tracked in your subledger. Using Oracle project, do not include a project segment in the accounting. See, if I doesn't have a project module, I will add a projects. If you have projects module, everything will be covered there. Why I should have a projects module? This is what said here. Value and value set. We seen in the practical, when you define value set, you need to determine how much you want to validate. Independent, dependent, table. Oracle recommend to use independent validation to the accounting freezeful. Yes, it doesn't have any complication. So, based on the industry you are creating, you have to do based on that, you have to provide the validation.